China is struggling to get back on its feet after Beijing's authoritarian policies and draconian lockdowns have taken a toll on its economy. After an initial spurt earlier this year, China's post-pandemic recovery has softened, according to the latest official data from the world's second-largest economy. GDP growth is losing momentum. It came in at 6.3% in the second quarter, from a low base a year ago. Even as a record 11.58 million graduates are set to enter the workforce this year, youth unemployment is widespread. The jobless rate for the 16 to 24 age group hit a new high of 21.3% in June. In this video, let us explore how is Beijing responding to these economic challenges. Exports and imports both slumped in July and the consumer sector slipped into deflation as households and companies held on to cash rather than spending or investing it. Post-lockdown, cautious Chinese consumers face a housing crisis and stagnant wages, affecting spending. Manufacturing is set for its fourth consecutive monthly decline, while the service sector growth decelerates. China's exports, the lowest since early 2020, struggle as global central banks combat inflation. Deflation, the fall in production as well as consumption, shrinking exports, and the government's belligerence towards business don't augur well for China's economy, especially with the Biden administration looking to shift global supply chains away from China. Concerns are now being raised that the country will struggle to match the growth rates it saw in previous decades. While the latest official data indicates that China's once unstoppable economy is losing momentum, it is premature to conclude that the China miracle has ended. This miracle has been powered by three engines of growth: exports, real estate and infrastructure projects, and all three are sputtering. Since the shock of the global financial crisis of 2008, Beijing has tried to build a fourth growth engine: domestic consumption. But the share of consumption in GDP growth is down to 32.8% from 54.5% in 2021. Beijing remains optimistic about meeting growth targets despite economic setbacks. As it struggles with immediate and structural economic challenges, one assertive step Beijing has taken is to name Pan Gongsheng as the new governor of its central bank, the People's Bank of China, PBOC. Although the central bank governor is a key figure in the economy, the elevation is significant as the technocrat isn't regarded as a close ally of President Xi Jinping and has a reputation for being an outspoken hardliner. This suggests Beijing may be prepared to test a firm hand on the wheel. China may not quickly return to blockbuster growth anytime soon, but that doesn't mean its economic power is ending. Rakesh Mohan, a part-time member of Prime Minister Narendra Modi's Economic Advisory Council, has calculated the head start China enjoys. Even if India's GDP growth could be accelerated to exceed 8% a year, from just above 7% right now, India will hit a per-capita income of $8,500 by the late 2030s, lower than where China is today. On life expectancy, India is 30 years behind China. And despite huge improvements in gross enrollment ratios, India remains 15 years behind China on secondary education.